I'll explain in a second when I explain the Wyckoff method. We'll talk about the news in the coming week that's going to impact Ethereum's price. These are education content only, not financial advice. So we can look at the daily chart, and today Ethereum is dropping by about 10% as of this moment. It tested the 1550, this yellow dash line. You can see the wick just touching that level and then bouncing up. So the volume has been increasing. With this kind of price spread, it's very different from the two candlesticks yesterday and the day before. Yesterday, the high volume, you can consider the bulls trying to push the price back to the previous downward channel. Okay, that rate of descent. But today, this is not the case. Okay, the trajectory basically changed. There's still 5 hours and 45 minutes roughly left for today's candle. Let's see whether it can close, or whether you think it can close back into the downward channel. So, in my last session, I shared that Ethereum may well come to test the 1800, and it happened quicker than I thought. Now, it has tested way lower. So what to expect next then? If the trajectory is really, the rate of descent is really changing to these kind of steep level, how do we manage, right? Here, if it is really continuing with this kind of price spread and this ascending rate of descent, obviously these dates we can bring across. Okay, there is a date over here, the 7th. If all of a sudden there is some crazily good news coming out from the weekend, then there's still a chance to reclaim or get outside of this downtrend. If the next 2 days no magic happen, June 9th. All right. This is the date, assuming the price still stays above this yellow line, the 1550, and continue to trade sideways. Then it will enter this triangle, right? The 2C's decision point comes in. Either it continue with the trend, testing the lower level, meaning breaking this yellow key level, or it breaks the ceiling, this resistance of the downtrend, and ease out of this very steep downtrend. Okay, so that's the short-term view. How about if it really drops crazy? Okay, like quicker than I expect, similar to what happened to the 1800. Okay, it paused over there for just 2 days, and then immediately today it made another dive. So if that happens, what are these levels over there? Let's stick it to the 9th, but it's somewhere around the 9th to 10th those dates. What are these orange levels? Okay, 1410, 1225, and even the purple key level of 1050. If we look to the left, okay, because Ethereum has dropped below the February 5th and 6th, the big commitment dates, okay, from the bigger players, those volume, we are back to that kind of volatility and volume now. We have to go back further. 1410 was around the low of the 2025 April accumulation. And 1225, or the purple line, 1050, was the low, or almost the bottom, of the 2022 accumulation cycle. Now bring us to the picture, the bigger picture. Remember I shared in the past sessions that I have two hypotheses over here. The big white box, okay, and also this yellow, milky yellow box over here. Those are two hypotheses of what I call the long-term playground. Why? Because for the white, it basically assumed that the base price, the bottom of Ethereum, hasn't changed since 2020. Okay? If it is so bad that money is being sucked out of the crypto market. Theoretically speaking, if this long-term playground, the white one, holds true, Ethereum's price can go back to that kind of level. It sounds crazy, I know, like $100 for Ethereum. Yeah, people will say you're mad, right? And well, just ask ourselves, compare now to 2020. Yes, that was the COVID period. Now, what's happening? Wars after wars, and energy prices going up. A lot of important materials, including fertilizers, are being impacted, and recession worry, all that kind of things. Inflation isn't going down. Rates, that's going to impact the flexibility of rate cuts. All this we'll get to the later part in this session when we get to the news. To get back to here, now that the price is dropping below this yellow line, if it drops further, it is going to break the second hypothesis that Ethereum has a higher bottom over time, like Bitcoin, because that assumes Ethereum behaves similar to Bitcoin over time. The base price, the bottom price is just going to go higher. This is the chart of Bitcoin. Okay, Bitcoin is still high up. We're still waiting for that to happen. If you look at my Bitcoin's analysis video just a few days back, we talked about the low of that box, this bottom for Bitcoin. It leads to like mid 30,000 range. For Ethereum, it is already hitting it and dropping below where it should be compared to the timeline. Of course, you can say sometimes it does happen that certain extremes like these tops, these blow-off tops, go outside of the channel for a short period of time. Let's see whether that's the case. Okay, we hope that it doesn't drop below the purple line. Okay, 1,050. That's the 2022 low or bottom. Okay, compare now to 2022. Think about the situation around the world. Think about liquidity. Is it better or worse? If there's no money printing, what's going to happen, right? If the stock market crash, is the sentiment going to get better or not? Maybe crypto will front run the stock market to recover, but we have to go through a tough period. So, given the Wyckoff picture here, I have to cover it. I haven't mentioned it yet. Previously, I already talked about that, if this is really the selling climax and that's the automatic rally, we still would expect, more tests to come. But what's happening now is that it seems like this period is more like another relief rally, similar to Bitcoin. It's got two, right? From the peak, dropping down, it's got one LPSY and then another LPSY. So that's the Bitcoin chart over here. Two, actually, if you count that mini one, it got three. So it looks like now, compared to the 2023 cycle, 2022-23 accumulation cycle, it has just entered the midsection, and it seems like it is trying to accumulate a little bit lower. So I'm not going to take out these yet because these may still hold true. All right, look at what happened over here. After the automatic rally, the price still dropped further down. Sometimes it goes lower than the selling climax, and that's totally fine. So I'm gonna keep it over here and see how far it's going to go. And that defines we're transiting from the early stage of the accumulation cycle, getting to the mid stage of the accumulation cycle, meaning continuous tests to check out the paper hands. All right. So now we get to the news. What news in the coming week that's going to drive Ethereum price either, stabilizing or getting worse? US CPI report. So this one, inflation. We all know it's going to be tricky with the situation in the Middle East, right? Ethereum often behaves like a higher beta risk asset, making it particularly sensitive to these kind of liquidity expectations. So the bearish stick is very straightforward. Sticky inflation hits growth asset hard. So these kind of assets like Ethereum, if people expect higher CPI, higher yields, stronger dollar, and tighter financial conditions, okay, then that's not good for Ethereum. What's the bullish take then? Lower inflation, if it does, revives the risk trade. So people expecting there's room for future rate cuts, and it's going to ease the financial conditions. Okay, then in this situation, Ethereum is going to get a green light to, at least stabilizing and eventually getting maybe institutional retail buy-in again. Okay, the king, Bitcoin, and Ethereum, you can call that the queen or the prince, whatever that is, the big two, right? It's going to benefit first, and then the rest will follow. Now, market's position ahead of FOMC meeting. We know the meeting is, still more than a week later, but people are going to front run and speculate. So I'm bringing it to you now. I'm just going to change the interface a little. So here, if it is going to be some positive news coming out, okay, they're expecting a more dovish comments coming out, then obviously they'll start buying given the big drop this week. Okay, some people are going to buy the dip and expecting, they're going to come out to say something good, then there may be a bounce, at least they make a little bit of profit, even though if they're not going to stay long. Some speculators would do that. What about a bearish take? It can be spun in a way that, the Fed may stay restrictive for longer. Okay, even if it's just speculating. Okay, the media would say, okay, given what they said, we are expecting rate cuts are not likely, or maybe there will be even rate hikes. Then that's going to add to the pressure to risky assets like Ethereum, right? The third one, Ethereum ETF flows. So this, even though it's probably only portfolio rebalancing for institutions or retail investors, it is going to drive people that's sitting on the fence waiting or thinking there are going to be diamond hands this round, reassessing whether they want to, get out of the market for a bit and get in at a lower price before they become the real diamond hand. So the bearish take over here is that institutional interest is losing momentum. So if there's continuous weak or negative flows, that means the investors are unconvinced, okay, by Ethereum's case. Getting in is going to benefit their portfolio. They're not thinking that way. Then that's going to add to the challenge, to the rate of descent that we have just seen in Ethereum. The positive side, however, is that institutions are quietly accumulating. Remember, when we talk about Wyckoff, we always say when we enter the beginning of the accumulation cycle, that's where the panic sell, when the panic sell happens, that's when the whales start to buy. That's why we see all these large red candles. At the end, there are always one particular red candle, okay, with a long wick from the bottom. Imagine either that's 1 million or 2 million small retail investors like us getting in, or is it like a couple of bigger whales got in that's going to create that kind of pattern? Okay, so going back to the news, what's next step? new Ethereum income, oriented products launch, that means there are new avenues that drives investor into the Ethereum ecosystem. But how is this a bad thing? Let's take a look at the normal take. Okay, Ethereum is becoming a yield asset, and basically we talked about it's going to attract new investors or more investors going into Ethereum space. The bearish take, however, is that there's going to be demand problems. The news, the media can spin it in a way that the emergence of income-focused products may reflect an effort to stimulate demand rather than organic investor interest. So they're new products, but there's no strong uptake. Then that's going to create a problem. Okay, or they're going to just present it or paint it in a way that this is just another way to, lure people in given the weak demand or, these kind of bearish situations. They're just trying to, pull more people into crypto or Ethereum. So that's the bearish spin. Now, and other economic data. Initial jobless claims. Okay, this sounds bearish, straightforward if the number is high, right? So it means the recession risks are growing if the jobless claims, surge. What about the positive side? The bearish is done. The bullish spin is that the economy is slowing without breaking. So the soft landing kind of headlines that you see, and people was thinking or was afraid of a severe recession going to hit, but then the softer jobless claims data is showing or being painted as, we're having a soft landing instead, right? So then the sentiments would improve. Okay, less worry. And people are like, okay, maybe we're fine. So consumer sentiment and other similar or associated metric. So if the sentiments is strong, like households are still spending quite a bit, that means the economy is still not that bad. People are not, even if we see a lot of news or like videos on YouTube, interviews on YouTube saying a lot of households are living paycheck to paycheck. But if these kind of data is showing us, oh, they're still spending, it's not too bad, right? Then that's the take or the spin that's happening. And people are like, maybe it's still fine. And the riskier assets may not drop further. They may take a break. But that doesn't mean that's going to cause a batch, right? Separate those two. How about the bearish side? When the spending slows down, that's going to trigger another round of worry. Risk-sensitive assets like Ethereum is going to face this headwind, right? Straight on. Middle East tension. We all know, we have a deal. We don't have a deal. Okay, we're going to bump you. We're not going to bump you. Okay. Bearish, straightforward. Okay, risk of selling continues. This is not getting resolved. So we're going to sell all the risky assets. Okay, keep some cash, dry powder. When things really get sorted, we'll get back in. That's the take. Okay, that's why you see the crypto market may be front running the stock market and some other asset classes. This round of sell-off may be a situation of that. Okay, let's see whether that's the case when next gold, silver, commodities, and eventually stock, whether they're going to act after crypto. How can this be bullish, or what's going to make it bullish? So, uncertainty traditionally, especially for Bitcoin, okay, people would think that's safe haven given the chaotic situation. In the case of Ethereum, imagine this case that Ethereum is one of those infrastructure that sells decentralization, right? In Middle East, certain data centers were being attacked. And if you have your service or your blockchain hosted mainly within the region, then you are going to be assessed as not as reliable as Ethereum that's decentralized around the globe. All right, so compared to Ethereum, people would think, hey, if I host my stuff in the old way in certain data centers within a single region, it may not be as safe as hosting it on a chain that's decentralized. But of course, that comes a big caveat because not everything can be hosted globally, given privacy law restrictions. So there may be certain services that can move or migrate to these kind of platforms, like smart contract platforms, decentralized apps, but it's not a straightforward approach. So even if you see these kind of headlines, think twice. What kind of steps or hurdles those businesses has to go through before they can actually conduct such kind of migration. Next, the other part of the world in Europe, right? This has been going on for years. It hasn't finished yet, and we're still seeing, sometimes the news dies down, but, sometimes it seems like they are, heating up again. And we don't know what Europe is going to do. Given the Middle East situation, they may reposition or re-strategize to address the situation in Ukraine and Russia. So whatever changes that comes in is going to turn the tide in the market. So the bearish take is that uncertainty is rising. Okay, if Russia and Ukraine escalate again, okay, maybe the war or the conflict spill over to region that's at the outskirts of the original core, then that's going to trigger more worry. Or if one side is taking more advantage or making better moves, then the other countries, surrounding countries especially, would worry as well. Like if Russia push further in, whether or not they're going to stop at a certain location or certain region and not pushing further is to anybody's guess, right? So the Europe countries may think, okay, now they've pushed to a deeper part. How are we going to position ourselves, right? The bullish take is that a peace deal again, okay? If they finally come to make a deal and say, okay, we're not going to bomb each other or push any further, we're going to stop at where we are now. Then that's going to solve some of the worries, clear some of the worries, and people are going to go back to just focus on the things that are unresolved. Maybe Middle East or inflation, recession, rate cuts, all that kind of things. Okay, one less worry, better sentiment in simple terms. All right. Okay, why mentioning Bitcoin over here? Because it's the king, right? And it's going to impact the entire market as we can see it. Bitcoin sell off, the altcoins aren't going to survive. Even though some may have made a slight bit of gain in the past few days, but mostly are turning red. So ETF flows. Positive side? No. If Bitcoin is gaining momentum, Ethereum would benefit as well. Bearish take, just flipping the coin or turning over your hourglass, it's going to flow out, then it's going to create negative sentiments, and the rest are going to, get similar kind of outflow as well, at least facing certain pressure. Okay, of course, unless if Ethereum is going to be adopted by a large number of institutions, that's another story. That's when Ethereum may outperform Bitcoin, but that's totally different scenario. Now, last but not least, the ETH BTC pair, reacts to macro developments. So a lot of traders compare altcoins, or Ethereum in this case, to BTC. If this pair, investor are moving up the risk curve, meaning a strengthening ETH to BTC ratio, then investor may start to get back in again. That's another way you can look into the market, but instead of just comparing it or looking at the USD pairs. The bearish take, however, is that if Ethereum underperforms Bitcoin, that means the capitals are rotating into Bitcoin rather than parking into other projects. And that's a sign of risk-off mode. So this gives us another picture, whether or not investors or the confidence are already coming back. Leave a comment and let me know what's the hardest call for you. And also, I've got my weekly write-up on Substack. You can go check it out. It can help you understand the market changes better. Also, being a channel member gives you basically 48 hours earlier access to these videos. So join the existing members now. See you in the next video. Thank you.